Thanks so much for joining us here on a Thursday. Hope you're doing well. I'm Marlon Bowling, your tour guide to the ag commodities. Glad you're with us. It is weekly export sales day. And yes, indeed, we got the numbers from USDA a short time ago. Well, let's review what we had this week. Any surprises? Let's take a look, shall we? We go to the board and we have the corn coming in this week at 1.02 million tons. That was not too bad coming in over the amount that we had last week, that's for sure. We had soybeans at 902,200 tons this time. We had soy meal, 293,100 tons. We had soy oil going down, a net reduction on soy oil of 500 tons this week. And the wheat came in at 334,100 tons. Now, we also, of course, have numbers for grain, sorghum, and cotton and rice. Let's review what we had this past week. On the grain sorghum side, that was not a good week. We had net reductions on grain sorghum of 67,300 tons. And we had upland cotton sales of 136,600 running bales. In the rice, we had 13,100 tons reported last week. I didn't see any overnight export sales, and I want to double check along with Brian Hoops of Midwest Market Solutions. He's in Springfield, Missouri, see if he saw anything on the wire as far as flash sales.
Good morning, Marlon. No, there was no sales this morning. So we've had 4 days this week, only one sale, and that was yesterday. That soybean sale, almost all for the new crop. Export sales out this morning, probably not going to be a game changer, but you had soybean sales, kind of the highlight here, over 27 million bushels. That is a strong number, the highest in 7 weeks. And it puts us already at the new revised marketing year level the USDA is forecasting at. They just changed it last week, and we have 3 months of the marketing year left, so we're already there. They're going to need to revise it again in the June supply and demand report. And corn sales were okay, probably double the pace that we need to reach the USDA forecast. So they didn't revise anything last week in the USDA supply and demand report for corn sales, but they may need to in the future because we're running well above the pace already needed. So soybean sales for the new crop marketing year well above this last year, so they're off to a good start as well. The wheat sales are the ones that are real disappointing. We're getting to the end of this old crop marketing year, and we're right in line with the slow pace that the USDA has us on already.
All right, now we also last night, as the Wheat Quality Council wrapped up day 2 of their wheat tour in Kansas and surrounding areas, they met in Wichita, compared notes, and it was a bit surprising. Yeah, the number came in much lower than a year ago, but what they had for results on day 2 was 37 bushels per acre. That included a lot of zeroed out acres that they obviously witnessed out in the southwest part of the state. So some areas, as you got toward the central part of the state moving east, obviously made up for that to some degree, but we'll get the final tally a little later on today. Now let's review how we traded overnight. Did we rebound after the sell-off we had yesterday? Well, on the corn, no. July down another 7 cents overnight at 774.5. And December was down 10 3/4. Soybean trade July was 8.5 higher at 1671.25, and you had the new crop November contract actually 4.25 lower overnight. Okay, on the wheat, we had the big move downward yesterday. They followed through overnight. July Chicago down 31.5 cents, and in the Kansas City market, July went down 40 cents overnight at 1284.5. My goodness, they've taken a big bite out of that market in the last day and a half. Spring wheat down 22 3/4. We'll come back in a moment and we'll talk about this livestock trade on a Thursday when we come back. Well, we talked about the weekly export sales numbers that came out on the grain side, and on the beef and pork sales. Let's take a look at what they were this past week. Well, the beef sales came in at 23,300 tons. We had the pork sales at 24,100 tons. Let's go back to Brian Hoops of Midwest Market Solutions. So anything in those two numbers there that really caught your attention this morning?
Those numbers down from last week. We had marking year high in cattle exports a week ago. And shipments also down from the previous week for both beef and pork. So, it's we're continuing to sell some beef to China. They continue to be decent buyers. But these numbers that we saw this morning, certainly not game changers or trend changers for the beef and pork markets like we really need to see. It's a kind of a money flow situation, along with expectations that the stock market economy are going to be really tough to sled through during the second quarter of this year into the third quarter. It's going to be a real struggle, I think, for these beef and pork markets to see and maintain any type of rebounds. They're going to find some pretty heavy selling pressure, I'm afraid.
All right. I did notice on the printout that accompanied today's weekly export sales report, on the beef side, Mexico did not buy anything again this week. China did buy a little bit of beef. Let's see, it turned out to be 2,900 tons this week. And China also bought a little bit of U.S. pork this time, 2,100 tons. Not quite as much as last week, I don't believe. And Mexico did buy some U.S. pork. They were in there for 8,400 tons. Now let's look at where we wrapped up yesterday for kind of a guidepost as where we start out today. So let's go to live cattle. And on the big board, we had a down day yesterday. If you recall, we had the June futures down $1.50. The August live cattle were down $1.77 yesterday. We had the feeder cattle market finishing up on Wednesday with the August down 97 cents at 165.80. And lean hogs, yesterday they managed to close higher yet again. So a bit of a comeback after selling off quite a bit. Let's go with July. They got as low as 104.50 and finished at 108.52 yesterday, so that was up 77 cents. What do you see for an opening call here this morning on cattle and hogs, Brian?
Yeah, I think in the hog market, we're probably looking at a little bit softer tone here. Cattle just steady. Question will be is what are the funds going to do after the opening bell? Yesterday the hog market caught a bid. We saw some short covering coming well off of our lows, and that's what the cattle need to see is, early in the mornings we're seeing some light gains, but those small rallies are sold until we can get a situation where we maybe open lower, see some short covering develop and see just a profit-taking, call it type of rally in the cattle market where the funds cover a bunch of big short positions. We've seen that a couple times in the hog market, and cattle are really searching for that bottom where we can see that develop as well.
Okay, thanks, Brian. Appreciate that very much. Brian Hoops of Midwest Market Solutions. So, Suzanne, we're about ready to kick things off at the bottom of the hour.